Barton Crockett, senior research analyst at Rosenblatt, joins us now to talk about all of this news coming out of Disney. Barton, I guess let's start right there with the fact that there was a lot of content news out of Disney, whether it is ESPN launching next year as early as the summer, whether it's now Taylor Swift, whether it's some of the conversions and details around the box office, or the JV for the sports bundle. I mean, pick your poison. Oh, and of course, Fortnite. How does all of this speak to this plan that's rolling out amid activist investor under Iger?
Well, I think the big picture here is you have a lot of energy that Disney's putting out to, basically throw some spaghetti against the wall and see what sticks. Do we have a lot of confidence that this new sports bundle is the answer? No. The pricing's probably a difficult, needle to thread. Is Fortnite what it was a few years ago? No. It suffered a little bit from, being its impasse with Apple on the iTunes store. Will Disney, be able to resolve that part of it? No, but can the content resonate? Perhaps. These are interesting. Is it great to have Taylor Swift? Yes. Will the movie slate get better in a few quarters? Yes. But there are some things here that are very hopeful in the quarter. And the hopeful thing is that they were able to improve their profitability picture substantially and really deliver on those cost cuts. And I think the real question here is, can they grow the top line again? And that was flat. And the real question is, can you get enough out of streaming to really offset the headwinds that are clearly still there and probably building on traditional pay TV?
You sound very cautious for a man that has a buy rating on Disney stock right now. How much does free cash flow matter? And I ask that because the new free cash flow guidance of $8 billion for the current fiscal year starts to return Disney closer to the types of levels that we saw before the pandemic.
Look, I think the free cash flow story is great. And I think the willingness to kind of commit that to shareholder returns is very encouraging. I mean, I was not expecting a share repurchase for a couple of more years. So they're announcing one now. They're executing it. That's great. They brought back the dividend at a little bit better level than I would have anticipated. These really kind of push back against some of the fears that built around what were they going to have to pay Comcast for Hulu, and how much were they going to have to sink into streaming to really make it work. So the cost side, the shareholder returns, those are great. What we need to see is the consolidated entity put up growth on the top line. That's really what it's going to come down to. Cost will only take you so far.
Barton, you bring up an interesting point about Epic's issues with Apple. And I wonder if you think that Bob Iger can have a positive influence on Fortnite versus Apple the way he did with Pixar versus Disney, especially because Disney now has skin in this game, and they've traditionally been one of the earlier adopters, supporters of Apple's platforms, kind of the opposite of the tack that Epic is taking now.
Well, look, I would hope so, because you'd want to see a functioning Fortnite, for this to matter for Disney. And Fortnite, isn't really functional if it's not fully kind of represented in the App Store. So hopefully, maybe this is a sign that the worst is behind us on that. And, but we'll have to see. Iger, if anyone could build a bridge, Iger certainly could in this situation, I would think.
Is this yet another reason for Bob Iger to extend his tenure as CEO? I mean, now he's announcing these new things, Taylor Swift, Epic, investment. The thing he had the least to say about was the last question on succession.
Yeah, look, I think the succession issue's been pushed back a little bit. It's not going away because he's not immortal. I mean, we have to, he has to pass the baton. Fingers crossed, hopefully they can get it right. Third time's the charm.